Hi everyone, this is Fan Liang from MoneyWiseSmart. Today, we will talk about JD.com, one of the leading e-commerce companies in China.
It takes a long time to research and prepare the video, so your support will go a long way in motivating us to produce more investments videos like this. I would really appreciate if you can help to smash that like and subscribe buttons so that more people will get to know about this video.
So we have done a deep dive research into the various aspects of JD's business. And as you can see here, there are about 150 slides, but we are not going to go through them all today, as otherwise it might become too long or dense for some of you. So what I'm going to do is I will talk about some of the main points for you to get an understanding of the business and also highlight certain key or interesting points for you. So there'll be slides where I'll glance over or skip. But if you want to get down to the details and have a more in-depth understanding of the business, this research PDF is available on Teachable, so you can always read the slides from there, which we would recommend you to. Now, let's start by talking about what JD's business is. So JD was founded in 1998 and it was listed in the US in 2014 and then in Hong Kong in 2020. It has a lot of employees at about 300,000 employees and about $500 million active users. So that's huge. And it was doing about 400 billion US dollars gross merchandise value in 2020. So JD basically want to become the most trusted company in the world and is going to be powered by technology for more productive operations and sustainable world. And for its retail arm, the vision is basically to sell goods from all over the world, not just China, and also to sell all kinds of goods to the world. And it aims to be unique by providing superior customer experiences. On its history, it was started as a retail business in 1998 by Richard Liu. And then in 2003, SARS outbreak actually hit the country. So during that time, JD moved online in around 2003, 2004, and it has been online since. And over the years, JD has undergone a lot of significant developments and the company has grown much larger with more businesses. And in 2020, 2021, it spun off JD Health and Logistics and IPO'd them. And they actually wanted to spin off JD Digit and IPO it too in 2021, but it wasn't successful. Now let's look at how the company presents the financials of its core operations. It looks pretty simple. So here you have JD Retail, which has the JD platform and also JD Health, and is contributing to most of the revenue and is profit making. Next, we have JD Logistics, which just got spread out in 2021, contributing some revenue and was profitable or not profitable at sometimes. And then JD is investing in a lot of new businesses for its longer term growth, like Jingxi, JD Property, and JD Worldwide. And they are contributing minimal revenue now and also burning a lot of cash in terms of like billions of RMB a year. Now, if we look at JD's business, it's actually a bit more complicated than that. And here is how we look at it. So, and the key here is to understand how these different businesses fit into their financials so that when you do the valuation, you know what number to take and whether how to not miscount or double count certain businesses, especially when JD's business is always changing when they are buying new companies or with equity investees changing into subsidiaries, etc. So as of 2020, most of the revenue came from JD Retail and mainly from its JD platform that has the online first-party retail business and also the online third-party marketplace business. Then some revenue coming from JD Health, which JD still own about 67% of it. Then under JD Retail, we also have omni-channel business where JD is partnering with Tata Group, last mile logistics company. And then under omnichannel, we also have 7 Fresh brand and then JD East Store and also some partnerships with Walmart and Yonghui Supermarket. And JD also provide marketing services for the merchants. Next, on new businesses, it's still small now, and most of it is actually just contributed by JD Logistics, which JD still owns 63%. And then we have those JD Property, JD Worldwide, and Jingxi business, which comprise of a few different businesses that we just talk about. And we'll go into some of the details of this business later. And now it's just to give you a sense of how everything fits together. So on top of the operating business, JD also has quite some investments, which was worth about 100 billion RMB book value at the end of 2020. And about 60 billion comes from equity investees, with the rest coming from investment securities for listed companies. So for equity investees, for the ones that they have significant influence, they account for them as equity method. And here you see listed companies like Yonghui Supermarket, Tata Group, and also JD Technology. And the thing to note about this is under this equity method for the accounting, for the book value on the balance sheet, they actually account for it by taking the cost of the investments and then adjust it for any post-acquisition profit or loss. So some of these companies are actually still loss-making, burning a lot of cash to get market share. So on JD's books, if it is a loss for the year, then JD has to keep reducing the book value. And that means maybe that book value might not be representative of the market value, which is why, I mean, if you take the market value based on the share price of these companies, you can see that the market value actually exceeds quite a lot of the book value recorded in JD's books. So this 60 billion might be understated. And then we have other equity investees that JD don't have significant influence. And also for investment securities listed ones here, you have companies like China United Network Communications, VIP Shop in China, Farfetch.com, ESR Cayman, and also some other less material investments. So later on in the valuation part, we'll put everything together and adjust some of their values from book value to market value. And here is just to give you a picture of what kind of investments JD has actually done. On the business model, it's interesting to see how some of the key players in this market all converge to in the end. Like we see JD and Alibaba in China and Amazon in the US. In the end, they are all doing similar things, even though they have started out quite differently. So JD started out with the first P business, just like Amazon with their books, while Alibaba started with the third-party businesses, just getting the merchants. And JD.com was actually the first party to actually really invest in their in-house logistics. And that's what Amazon is doing now, which was later than JD.com. And for Alibaba, they are still not that much doing their in-house logistics yet, where they have a partner logistic network. So they are doing more of a capital-light approach, but increasingly they are also investing more capital in. And then in the end, JD also went into 3P business and also offered more merchant services. And now everyone is doing omni-channel C2M, or Amazon is doing their own private label. Now, let's think about how JD can actually grow its business. JD can grow its operating businesses and also grow its investments by investing in complementary businesses. And if we look at the operating businesses, JD can either grow its GMV or the revenue side, or the profitability of its businesses. Let's look at the GMV and revenue side first. So JD can try to grow its number of users and also the merchants or businesses that it work with. And because the market is growing pretty fast, then JD naturally gets a tailwind. JD can also try to increase their penetration rate in the existing markets and also expand into new markets, especially the lower tier cities, like what it is doing now with Jingxi, which is driving a lot of the user growth. Then JD can try to increase the average revenue per user of its users, coming from either more frequent purchases or a higher basket price. And that can be increased by better targeting of the customers through, say, C2M initiatives and also other business models like social commerce. And if JD starts providing more business services like retail as a service to the merchants, then the revenue would go up too. On the profitability side, we'll go into financials more in the financial section, but on the gross profit side here, for the 1P business, as JD grows bigger, it will have more scale in the different categories of products, and that means they can get better procurement prices, so reducing their costs and improving their gross profit margin for 1P. And for the 3P businesses, as it grows bigger, it will have more pricing power, and also as it increases more services to the 3P merchants and more 3P merchants use their service, then this will lead to a higher take rate for the 3P business for JD. And on the logistics side, as JD gets more scale, their warehouses are more fully utilized, then they get that scale benefit, which will help with their fulfilled gross profit margin too, which is gross profit after considering the fulfillment expenses. Then on the net profit side, on the operating cost, JD also gets some operating leverage as it grows, like on its sales and marketing expenses, R&D expenses, or G&A expenses. And JD's ex-CEO of the JD Retail, Lei Xu, actually thinks that the online marketplace has a huge potential for JD, because JD has been growing mainly through the 1P business first, and then now they are investing a lot into their online marketplace, which still has a long runway. So in terms of the landscape, there are three major online retailers, the big three being JD, Alibaba, and Pinduoduo. And there are also traditional retailers trying to move online too, like Suning, Walmart, and Gourmet Electrical. As we have seen just now, JD is the largest listed retailer in China, and it is much larger than the other top 9 players, but it is also the fastest growing in terms of its revenue. So if we look at the retail e-commerce sales market share, in 2019, Alibaba had about 56% share with JD at about 17%. And from 2019 to 2021, Alibaba's market share has dropped by about 9%, and JD had retained its market share, and Pinduoduo has gained about 6% market share. So one thing to know is in 2021 April, Alibaba was actually fined US dollar 2.8 billion because the Chinese government found that they have been abusing their market dominance. So they think that Alibaba has implicitly been implementing a 2-choose-1 policy for the merchants, where if a merchant wants to list on Alibaba's platform, then they can't list their products on another platform. And because now they are being fined and there are more scrutiny, if in the future Alibaba relax this exclusionary policy, then it might benefit other players like JD, where they have lost competitors in the past because of this policy, and some of them have come back like Starbucks and Estee Lauder in mid-2021. On number of users, Pinduoduo actually had a lot of users, and also it is growing the fastest. JD had the smallest number of users now at about 500 million, but as we'll see shortly, JD has a stricter definition on who to include as users or not than the other two. And one thing to note is JD's number of users has actually been reaccelerating recently in 2020, so growing close to Pinduoduo but still behind. Now, let's talk about JD's financials. From 2013 to 2020, its net revenues has been growing pretty well at about 40% a year, from 69 billion RMB in 2013 to about 700 something billion RMB now. Its gross profit has grown even faster at about 49% a year to about 109 billion RMB now. Something to take note is in 2020, the net profit figure was pretty high at about 50 billion, much more than its operating income. And that's because of some other fair value gains. So we shouldn't take this high amount into account when we do our valuation, because those fair value gains are not sustainable. Now let's look at the margins in terms of percentages. You can see here that both the gross profit margin and the fulfilled gross profit margin has been increasing over time. And that's just because of the scale benefits on the cost of revenues. And that cost of revenues actually include the logistics expenses incurred for the marketplace vendors or merchants. And then there are also scale benefits on the fulfillment expenses as they scale their logistics side for their 1P retail business. So that's why you see both margins improving. And if we break it down a bit further, that means that for the cost of revenues, as JD grows bigger, they are getting increasing purchasing power for cost of goods for mainly their 1P businesses. And then they get scale benefits on logistics, which will affect the fulfillment expenses. And then also the fulfillment expenses for the marketplace merchants, which is included in cost of revenues. Then as they implement better AI or more technology, then they become increasingly more efficient on their customer services side, which saves them on the cost. Lastly, maybe on the payment processing, there might be some leverage there, but it's unclear whether how much is it. So as of 2020, the gross profit margin was about 15%, and the fulfilled gross profit margin was about 8%, which has grown significantly from 2013. Now, let's talk about the valuation of JD.com. So as you can see here, JD's business is not the simplest. And the key here would be that to understand which business or investments and its financials sits where, and be careful not to miscount or double count any items in the valuation of JD.com.
For the remaining points of this video, you can check them out at our multi-bagger research series. At MoneyWiseSmart, we do deep dive research into wonderful companies to own for the long term. We have provided some of this research for free in our free research series, so definitely check them out at the link provided if you want to invest in good companies. I promise you will really benefit a lot from this research. If you have enjoyed this video, do hit the like button now, and don't forget to subscribe and hit the notification bell so that you'll be notified of our future videos. Do also join our Facebook group where we discuss interesting investment concepts and businesses. Thank you for watching, and see you in our next video.